Hello, and welcome to another Lincoln property blog, brought to you by Ben from Walters of Lincolnshire. This week we look at buying versus renting in Lincoln. Whether you're a first-time buyer exploring your options or someone considering a fresh start in Lincoln, the decision between buying and renting is one of the most significant financial choices you'll make. As we move through April 2026, Lincoln's property market continues to offer an intriguing balance of affordability and opportunity, particularly when compared to larger UK cities like Manchester or Leeds. Right now, the question of should I buy or rent feels more relevant than ever. Interest rates have settled into a new normal, mortgage products are becoming increasingly accessible, and the rental market continues to evolve. But here's the thing, there's no one-size-fits-all answer. What works brilliantly for one person might be completely wrong for another. That's why we've put together this complete financial comparison to help you navigate the buy versus rent debate in Lincoln. Whether you're weighing up the stability of home ownership against the flexibility of renting, or calculating whether now's the right time to take the plunge into the property market, we'd love to help you work through the numbers and find the solution that matches your life. Lincoln is a thriving cathedral city with a genuine appeal. You've got historic charm, a growing economy supported by the university, and a property market that remains far more accessible than the overcrowded southeast. The city offers that sweet spot many UK buyers are after: urban amenities without the eye-watering price tags. As of April 2026, Lincoln's property market shows competitive pricing for both sales and rentals compared to national averages. This matters because it means you're not fighting against the same affordability squeeze that's making property dreams seem impossible in some parts of the country. The local market is shaped by several factors worth understanding. The Cathedral Quarter remains a desirable location with strong demand. Meanwhile, expanding suburbs and newer developments offer more affordable entry points for first-time buyers. The university presence means there's consistent rental demand, which supports property values and can offer decent yields for buy-to-let investors considering the area. Getting specific about numbers helps you make real decisions. In Lincoln, you're looking at property prices that are genuinely accessible compared to most of the UK. A typical terraced property sits comfortably below the stamp duty threshold that would trigger significant tax bills, while semi-detached and detached homes offer more space without jumping into the premium price brackets. On the rental side, Lincoln offers competitive monthly costs that vary depending on location and property type. A one-bedroom property in the city centre will command different rent than a suburban three-bedroom family home. The important thing here is understanding the rent-to-price ratio in different areas. This ratio tells you whether buying or renting offers better value in that particular neighbourhood. When you compare similar properties across the city, you start to see patterns. Some areas show rental yields that appeal to investors, while others lean more towards owner occupancy. This information is absolutely crucial when you're building your financial model for the buy versus rent decision. What is the financial case for buying property in Lincoln? Let's be honest, buying a property feels significant because it is. You're making a commitment, taking on debt usually, and tying up capital. But the financial case for buying can be genuinely compelling, especially if you're planning to stay in Lincoln for the medium to long term. The biggest advantage of buying is something called equity. Every time you make a mortgage payment, you're not just servicing debt, you're building ownership. Compare this to rent, where your monthly payment leaves you with nothing but the satisfaction of having had a roof over your head. Over time, this difference becomes substantial. After 10 years of mortgage payments on a £200,000 property, you might own £50,000 or more of that property outright, depending on your deposit and any appreciation. Beyond equity, there's the appreciation potential. Lincoln's property values have historically grown steadily, supported by the city's stable economy and desirability. While we can't predict the future, historical trends suggest that patient buyers who stay in the market for 5+ years typically see positive returns on their investment. There's also something psychologically powerful about owning your home. You control the decor, the maintenance schedule, and your housing situation. You're not at the mercy of a landlord's investment decisions or personal circumstances. So what are the upfront costs and ongoing expenses? Here's where buying gets complicated. Before you even get the keys, you're facing significant upfront costs. Don't worry though, we've got you covered with the real numbers. First, there's your deposit. In April 2026, first-time buyer mortgages typically require 5 to 20% deposit, depending on the lender and the mortgage product you choose. On a £200,000 property, that's anywhere from £10,000 to £40,000, sitting in an account that could theoretically be earning interest elsewhere. Then come the transaction costs, solicitor fees, typically £800 to £1,500, and survey costs, £300 to £700 for a basic survey, more for detailed structural surveys. All in, you're probably looking at just over 1% of the purchase price in professional fees alone. Here's where first-time buyers catch a break. Stamp duty. Land tax thresholds in England remain at £250,000 for first-time buyers as of April 2026. This is significant. If you're buying a property below £250,000, which many Lincoln properties are, you pay zero stamp duty. That's potentially thousands of pounds saved compared to subsequent purchases. Once you own the property, the costs keep coming. Council tax varies by band, but roughly £100 to £150 monthly in Lincoln. Buildings insurance, typically £20 to £40 monthly. And maintenance. This is the one everyone underestimates. Industry guidance suggests setting aside 1 to 1.5% of your property's value annually for maintenance and repairs. On a £200,000 property, that's £2,000 to £3,000 per year for things like boiler services, roof repairs, and redecoration. Now let's flip the perspective and look at the long game. This is where buying really can shine financially. Imagine you buy a £200,000 property with a 5% deposit, £10,000, and a 25-year mortgage at current rates. Over that period, you'll pay the lender back the full amount borrowed plus interest. But, and this is crucial, you'll own an asset worth potentially £400,000 or more in 25 years, depending on appreciation rates. Even if property only appreciates at 3% annually, below recent historical averages for Lincoln, your £200,000 property becomes worth approximately £420,000. Subtract your remaining mortgage balance, which decreases every month, and you've built genuine wealth. Meanwhile, renters over that same period have accumulated no asset whatsoever. The equity you build works in stages. In the first 5 to 7 years, you're mostly paying interest with slower equity growth, but you're still building it. After 10 years, the balance tips. You're paying down more capital with each payment. By year 15 to 20, you're accelerating the equity builds up significantly. There's also the inflation hedge. Your mortgage payment may stay fixed if you've got a fixed rate deal, but everything else gets more expensive. In 10 years, your £1,200 monthly mortgage payment will feel much smaller relative to wages. Renters, meanwhile, face annual rent increases that typically track inflation or exceed it. What is the financial case for renting in Lincoln? Now, let's be fair to renting. It's not a financial failure or a temporary stage of life. It's a legitimate choice with genuine advantages. Sometimes renting is smarter financially and practically. The biggest advantage is flexibility. You're not locked in for 25 years. If your job in Lincoln doesn't work out, you accept a transfer to London, or you fancy trying somewhere new, you exit with 2 months' notice. Renters can pivot their life in ways that homeowners simply can't, without substantial financial cost and effort. Renting also requires minimal upfront capital. You need the first month's rent, a deposit, protected by law. That might total £1,000 to £1,500 for a decent property. Compare that to the £12,500 in upfront costs for buying, and you're looking at fundamentally different financial barriers to entry. For people with uncertain futures, career changes, those in unstable employment, or anyone who simply doesn't want the responsibility. Renting removes a huge financial weight. You're not betting your security on property appreciation or worrying about structural issues that will cost thousands to fix. Let's dig into what flexibility actually means financially. If you're renting and your circumstances change, you have options. New job opportunity in another city? You leave. Want to try a different neighbourhood? You move. Need to downsize because of redundancy? It's inconvenient, but you're not stuck with a property that you're forced to sell quickly. This flexibility matters more for some people than others. A 26-year-old professional early in their career might genuinely need it. A 45-year-old settled in Lincoln, with kids in local schools, probably values stability more. The capital requirement difference is real and shouldn't be dismissed. If you've got £5,000 in savings, you can rent immediately. You cannot buy. You're roughly £10,000 short of a decent deposit on even modest Lincoln properties. That's the fundamental advantage of renting when you're building capital or don't have substantial savings. You also have predictable monthly costs. There's something genuinely appealing about knowing exactly what your housing costs are. Your rent is fixed for the first 12 months. You pay utilities and maybe a service charge, but that's it. The landlord bears the cost if the roof leaks, the boiler dies, or the electrics need rewiring. This predictability is valuable, especially when you're budgeting tightly. You never face the shock of a £3,000 roof repair or a surprise £1,500 boiler replacement that homeowners live with. Of course, rents do increase annually, and the rental market is more volatile than many realise. But within a 12-month period, your housing cost is certain. Homeowners never have that certainty. The interest rate could rise if you've got a variable mortgage, and maintenance costs are always lurking. All right, here's where the rubber meets the road. Let's talk about the break-even point, the magic moment when buying becomes financially smarter than renting. The mathematics work like this. Buying has high upfront costs, deposit, fees, taxes, but low ongoing costs and equity building. Renting has low upfront costs, but higher long-term costs with no equity building. Eventually the lines cross. In Lincoln's market, that crossing point typically happens between 5 to 7 years. Here's a simplified example. If you buy a £200,000 property with 5% down, your transaction costs are roughly £12,500. Deposit, surveys, conveyancing. Your mortgage payment currently would be £1,088 monthly, plus the £12,500 upfront. An equivalent rental property in the same neighbourhood might be £900 to £950 monthly. Lower monthly cost, but zero equity building, and you start with no cost. Over 5 years, you've paid roughly £55,000 in rent, with nothing to show for it, except the experience of living there. The buyer has paid roughly £75,000 in housing costs, mortgage plus maintenance, but owns a property, potentially worth £250,000 depending on appreciation. The buyer is ahead financially. Stretch that to 10 years and the advantage grows dramatically. Stretch it to 25 years and it's almost comical how far ahead the buyer is, assuming they stay in the property and it appreciates reasonably. This is why property experts, and we're speaking from experience here at Walters, often recommend staying at least 5 years if you're buying. 5 years allows you to absorb the transaction costs through equity building and property appreciation. If you sell earlier, you might actually lose money compared to renting. The 5-year rule isn't magic, it's maths. Less than 5 years? Renting probably wins financially. 5 to 10 years? Buying catches up and takes the lead. More than 10 years? Buying is almost certainly ahead, unless the property market completely collapses, which hasn't happened across broad geographic areas in the UK since records began. However, your personal circumstances that influence your decision. Here's something important that pure financial analysis misses. Your life isn't a spreadsheet. The right choice between buying and renting depends heavily on your personal situation. A 28-year-old with a £25,000 deposit, stable employment, and plans to stay in Lincoln for a decade. Buying probably makes sense. A 35-year-old considering a career change recently separated, or unsure about long-term plans. Renting might be genuinely smarter despite the financial disadvantages. Employment stability matters. If you've got a permanent role with a major employer, buying is lower risk. If you're freelance, recently started a business, or work in a volatile sector, renting gives you a safety valve. Your mortgage lender will care deeply about this too. They stress test your ability to pay if interest rates rise, which affects whether you qualify at all. Family plans are relevant. Growing family needing space, buying gives you long-term housing security and the freedom to decorate and adapt the space. Unsure about family size or timing, renting's flexibility is valuable. Then there's the emotional and psychological side. Some people sleep better owning their home. Others find the responsibility stressful. Neither answer is wrong, but it's part of the decision. Finally, consider your alternatives for that deposit capital. If you've got £30,000 saved, is buying the best use of it? Or could you invest it differently and build more wealth? These are questions worth exploring with a financial advisor. My conclusion and action steps. So should you buy or rent in Lincoln? The honest answer is, it depends on your specific circumstances, timeline and financial situation. The numbers suggest that if you're staying 5+ years, buying typically wins financially, especially given that first-time buyers benefit from stamp duty relief on properties up to £250,000. And mortgage products are available across multiple rate brackets and deposit levels in April 2026. But if you value flexibility, have uncertain employment, or simply prefer the simplicity of renting, that's equally valid. Here's what we recommend. Start by getting clear on your own situation. How long do you genuinely plan to stay in Lincoln? How much can you realistically save for a deposit? What's your employment situation like? Are you more comfortable with the security of ownership or the flexibility of renting? If buying is appealing, the next step is getting a mortgage in principle from a lender. This shows you're serious, demonstrates you can actually qualify, and strengthens your negotiating position with sellers. It also clarifies exactly how much you can borrow, which defines your options. Whether you're buying or renting, Lincoln is a genuinely appealing place to live. The property market here is accessible, the city is vibrant, and there are good options for every stage of life. Whatever you decide, make sure it's the right choice for you, not just on paper, but for your whole life.